All right. Hello and welcome to Dishing with Diane, Season 3, Episode 21. I have to keep keeping track, but anyway, welcome back to those of you who continue to join, and welcome to those of you new to the show. And I appreciate you watching. This is always about providing education, information, keeping you as informed as possible. I just try to educate one conversation at a time and work through facts, not fear. And so today we're going to be talking about a very timely topic. And I've got my guest, Ron Klabunde, back here with me. And he is a lender with
Atlantic
Coastal Mortgage. And we're going to talk about the market right now. We're going to talk about buying now and just all the things out there so that you can be informed, equipped, and make your best decision.
It is so good being with you, Diane. I love these conversations. I love a warm fire.
Yeah, it's a little warm for a warm fire.
On a warm day. I love this.
It's
wonderful.
We have a smaller fire, but
yes.
Yeah, so thank you so much for taking time.
Absolutely.
And giving some good input for people. So what do we got? What are we going to talk about today?
So, as you mentioned, the question that you really kind of just posed for us is this a good time to buy? We, in 2022, we saw interest rates skyrocketing. In fact, interest rates have never gone up faster than they did in 2022. And so the beginning of 2022 was definitely a buyer's market because interest rates were still low in the first quarter of the year. And then that shifted very quickly, and seller's market at the beginning of the year. Seller's market at the beginning of the year, and then that transitioned very quickly to a buyer's market. And then the question becomes, where are we headed, right? So it became a buyer's market as interest rates were going up. And what's really interesting about this is that the human psyche says, do what everyone else is doing. And that's not a strategy that works when it comes to economy.
Like, what are you saying about that?
Well, here's what I'm saying.
Yeah.
When we were in a seller's market, what was happening here in Raleigh and around the country? Homes were being bid up $15,000, $20,000, $50,000, $100,000 or more, depending on where you were at. Mm-hmm. And so people who were first-time home buyers, let's say, or people who were looking to get back into the market were being priced out because they didn't have equity they could bring from one home into a new home, right?
Right.
And so they were being priced out when interest rates were low. Mm-hmm. Then interest rates went up, people stopped buying, but these first-time home buyers were like, interest rates are too high now. That's a backward strategy that doesn't work. The time to buy a home is when interest rates are high. Why? Because you're going to pay less for the home. Mm. You can always change an interest rate by refinancing. You can never change the price that you pay for the home.
That's true.
And so,
that's a good point.
And so when interest rates hit their all-time high on November 10th of 2022, like that.
What was that? What was the all-time high?
It was 7.1% on average. On average, it was 7.1%, right? When they hit their all-time high for this period in history, keep in mind that 7.7% historically is low, right? We just had it in our mind that it was high because we had just come out of the 2s and 3s, right? Okay, so the time
nobody cares historically, really. I mean, they do. But I'm saying, we're all in our moment in time, right? And so what's relevant to us, because I say the same thing. Right. Like, the rates were, like, what, 12, 13, 14%?
18% in the 1970s.
In the early 80s,
yes,
right?
Yes.
So it's all relative.
It's all relative, right?
So go on.
So we got used to this, and so now what I heard from a lot of first-time home buyers or people trying to get back into the market was, well, the rates are too high. What I kept saying to people was, buy now because the rates are going to come down and I'm going to refinance your loan in 24 months back into the 5s or 4s. Mm. So here's what's happening. The question now is, well, what's happening today?
Right.
Well, here's what's happened. Inventory in real estate across the country, inventory of homes that are on the market for sale is at an all-time low since the 1980s. Okay? And interest rates, as of November 10th, when they hit their peak, they have been consistently coming down since then. Now, like the stock market, there's ups and downs all the way through there, right? But they are consistently coming down to the point that a week ago, interest rates were averaging across the country at 6.1%, an entire percentage point lower. So here's what's happening at this point, and why people need to get into the market now, because I'm going to tell you what's coming, and it's already happening in certain markets across the U.S.
Listen up. Listen closely.
Here's what it is.
Hearing it here.
People got comfortable to hearing 7% in the news, and now 6.1 sounds good. Sounds good. And there are less homes on the market today than there were a year ago. There are less homes on the market today than there were 40 years ago. Okay? So here's what's happening. Buyers are coming out again, but there aren't any homes. So home prices have, with the exception of a few markets across the U.S., I'll get to that in a second, home prices are not falling.
They're stable.
They're stable.
They've come down some, though.
They came down
in
certain markets.
They've dropped even around here some. I think maybe an 8% droppage on average.
On average. On average.
That's what my...
That is not going to hold.
Okay.
And the reason why is because inventory is too low and interest rates are starting to come back down. So now we're getting this crisscross again.
Yeah, we're getting back into that.
Where the buyer's market's going to come back in and prices eventually will start escalating again and being bid up.
Okay.
In fact, if you drive, we're in Raleigh, you drive 4.5 hours north to Northern Virginia, homes are already once again having 10 to 12 offers on them.
Are they really?
Yes.
Wow.
As of, by the way, 3 weeks ago.
Okay.
Now keep in mind the DC area is in not just in politics, but also in economics and in real estate, is a global leader.
Okay.
Okay, so we have to keep that in mind. They are going to lead. They're leading the country once again with this shift. But again, Raleigh is a strong market. Raleigh's an incredible. We are nowhere near the end. We're nowhere near our cap in what housing prices can do here, right?
Just the other day, 2 articles came out. One claiming that we are the top market in 2023 to continue to see the demand and the pricing and the influx of people, of course, we know coming here. So, yeah, this triangle, Raleigh-Durham
we
market,
are primed for growth.
It's still a hot area.
Well, and here's let's compare it to Austin. Okay. I like comparing Raleigh and Austin because
they tend to trend each other.
They do, but Raleigh is trending behind Austin by about 10 years.
Oh, 10 years.
10 years, okay? So Austin hit their real estate boom, call it 13 years ago is when it started. And then it takes any market about 10 years to really take off.
Okay.
So by the time we got to COVID, 2019, Austin was already peaking its max. COVID hit and shot it even further. It was like a turbo, a turbo boost to a real estate market that was already high, right?
Okay.
So what's happening in Austin right now? They're struggling. The prices there have come down, according to a study I saw the other day. I think it was 13%.
Okay.
Huge fall off, right? And they're not going to start capturing market again quickly because they overshot the moon. Raleigh didn't overshoot the moon. We were coming up nicely into COVID. 2019 hit. We all wondered what was going to happen, and then because the real estate market increases with inflation, which skyrocketed through COVID, right? And the feds have been fighting that. Our real estate market went up with inflation, which is exactly what it was supposed to do. That's how a healthy market works. So people that were in real estate pre-COVID, before inflation, inflation didn't hurt us much.
Yeah. Okay.
For people who weren't in the housing market, now they have to spend another $200,000 to $300,000 because the market ain't coming back down.
Okay.
Right?
So how does this now come back to today and buying now? Because it's sounding like prices are going to be up.
They're going to keep
Rates
going
are going to
up.
come down. So where's the advantage to a buyer given the story you're telling? I mean, we understand the history and how we got where we are.
Yes.
So where does that bring us to, and what is the advantage?
So interest rates, if you, again, we're going to go back in history because history tells us the story, all right? As quickly as interest rates rise, they fall. Go back, anyone can Google 50 years mortgage rates graph, right? Just go Google that. You're going to see anytime there's a major spike like we just went through, there's an equal fall off, right? And fall off. So
see, all what goes up must come down thing,
every time, right? Every time. So we haven't come down yet.
Okay.
Now we came down, sure. At this point now, 3/4 of a point off the high of 7.1%, right? But we're nowhere near the bottom.
Okay.
And it takes about the same amount of time.
Okay.
So it was about 9 to 10 months of skyrocketing, and then when it really starts to fall, it's going to fall, and it's going to be 9 to 10 months. So I'm predicting that anyone who buys a home today, while in Raleigh, homes are not fully being bid up yet again.
No, we're
right?
not
We're
there.
not in a full seller's market yet. This is a buyer's market
still. It is
still.
a buyer's market now.
Okay, you get in now because in the next 18 to 24 months, I will be refinancing your mortgage down to a lower rate. Okay. That's what's going to happen. Right. So again, you can change the rate. You cannot change the price of the home. So get in while the home is low.
Okay.
Because they're not going to dump anymore. We're done dumping.
Yeah.
Get in now while you can, and then let's refinance the rate. What is going to likely be about 18 months from now, down to a lower rate.
Yeah, that makes sense.
It is speculated, and I believe rates are definitely going to hit the low fives again. Okay. That's a given.
Okay.
And it's speculated, based on history again, we very likely
might see the fours.
Might hit the high fours again.
Okay.
So
which that's a little more the norm, right? This 2.5 and all was a real anomaly, and I hope people can understand that. I think, I mean, again, we aren't, futurists or all. We don't have the crystal ball, but we can probably think that that's very unlikely that it will happen unless some other interesting, scenario plays out. But that 4-ish and 5-ish is very realistic.
Yep.
So let me just kind of make sure I understand and that folks understand, because now I can speak to the market from the real estate side, and obviously you've got the whole financial and lending side. I mean, right now we're seeing prices have come down some, right? Like I said, we're stabilizing. We call it normalizing and stabilizing. We're not having this drop off, nor are we going to see this tumbling crash that everybody still seems to talk, not everybody, but there's still some chatter out there. So with rates gone up just a little bit more when they were, it obviously moved some people out of the buying pool. And what's happened is that shifted to to that buyer market, in the sense of sellers were becoming a little bit more agreeable and amenable, negotiating things, entertaining things that they didn't maybe 6 months back. Right. So that's put buyers in a better space. I think what you're saying, Ron, is that buyers are still in that space, have a window of opportunity to still capitalize on that reality, kind of now, and that in the next coming months, when the rates start to really fall again, what's going to happen is more buyers are going to come out, which is going to increase that competition, which is going to put some of the power back into the seller's hands. Is that what you're saying?
That is exactly what I'm saying.
All right, folks.
And so, in fact, it was about 5 months ago, we started seeing that sellers were giving incentives to buyers to buy their home. So we had, I won't go into all the details, but we had the 2-1 buy down, we had the 1-0 buy down, we had sellers giving seller credits. I mean, all of this to help buyers get into the home. I can tell you again, in the DC market, in comparison, that's gone.
It's gone.
Like you're not getting 2-1 buy down. I mean, they exist. No one's going to offer them because the market is, again, they're a leading market. It's hot. It's going to come here. We're only 4.5 hours south, and we have a strong economy in the Triangle area. So it's coming. If we can we hit a couple things that I think are really important for first-time home buyers or people re-entering the market to know coming in?
Sure, absolutely.
Okay. Yeah. This is really important because there's a lot of myths out there of what people think is versus what reality is. Right, so let's hit reality.
Let's get the facts
reality
out
is
on
this.
the table.
If you have bought a house before and you've been, let's say, renting for 3 years, haven't owned a home for 3 years, guess what? you are once again a first-time home buyer. It is 36 months. Again, very few people know that.
Yeah, I didn't. Honestly, I did not know that.
And it's fair, right? So if you've been out of real estate for 36 months, you are once again a first-time home buyer. The other thing that we need to know is a lot of people think, well, I don't have money for a down payment. That's another myth that exists, right? You and I were taught when we were growing up, you need to have 20% down to put on a home. You need to put 20% down.
Well, and it wasn't even taught. I think it was more the
expectation, right?
You know,
Yes.
Things have shifted for
They
sure.
have.
Yeah. So some of us still living in that mindset because that's what we were taught and that's how things were practiced.
Yes.
So yeah.
Yes.
Working
So
through that.
let's hit on that. Part of the reason we were taught that or we understood that was because mortgage insurance back in the day was super expensive. You did not want mortgage insurance, okay?
Oh, okay. This is
Well,
great.
mortgage
Guys, I'm learning.
insurance.
This is awesome.
Mortgage insurance has come way down in price.
Okay.
So there really isn't a huge, not that any of us want to pay 50 or 100 extra bucks a month for mortgage insurance, but that's not a whole lot of money in comparison
To what it was.
right?
Okay.
So a first-time home buyer in this area can get into a home for as little as 3% down.
Okay.
And
Sure.
the advantage of that is the government has also made some recent changes. During COVID, first-time home buyers were pushed out of the market because investors were coming in.
Right.
Okay? Investors haven't gone away, but especially in North Carolina, I lend in 3 different states, especially in North Carolina, our state government has made it extremely difficult for investors to get property. That is to the advantage of the first-time home buyer. Okay, so I share that to say that by you only need 3%. And the state and the feds have put together incentives to keep lower interest rates in place for first-time home buyers. So I can get a lower interest rate for a first-time home buyer than I can for you or I who are currently in the market if I were to buy or sell and buy or just turn my house into an investment property and buy another.
Okay.
So there's real advantage to first-time home buyers again. Let's say that someone, though, is looking to move homes, right? From your home to another one, right? Maybe you're going to turn your current home into an investment property and buy another one, or you just want to move. You can get a loan for as little as 5% down in that case. My encouragement to most families is to put as little down as possible. Here's the reason why. Let's say you have $100,000 and you can get into a home with 3% down, and let's just say that with closing costs and everything, let's put it at $20,000.
Okay.
Right? And so you have another $80,000. The question is, do you take the $80,000 and put it into the house, or do you take that $80,000 and put it into another investment vehicle? And this is the software that I use. So when I work with families, I'm running these 2 scenarios. If you take $100,000 and put it in your home, versus taking $20,000 in your home and $80,000 in an investment vehicle, that's gaining 7.5% interest year over year. By the way, that's the average return of investment on a conservative mutual fund over 50 years.
Okay.
So I always run it conservatively,
Okay.
7.5%. That's low, right? You can do much better.
Okay.
Every time I run this scenario for a family, they come out, their wealth 10 years from now, their net wealth as a family will be $50,000 to $100,000 higher by keeping $80,000 in another investment vehicle other than their home.
Okay. All right. So, the couple things that you're saying, just to recap, right?
Yep.
So,
Yep. A lot of data.
No, it was, and it's great. I mean, this is awesome, and I love doing these things. I learn. I hope you all are learning things, and that's why we do this, because education and being informed is our best, tools to be smart about what we do with our hard-earned dollars, our money, and our time, and how we invest and go forward in housing and other things. But so basically, if you sat it out for 3 years, so you owned a home, maybe you rented, you did something else, whatever, you didn't have real estate for 3 years, it sounds like you start over as a first-time buyer.
Yep.
Starting over as a first-time buyer, now there are other opportunities and advantages that you can take, such as lower down payment. 3%
3%.
is you know, not a lot to have to put on a home. And then you're talking about how making different conscious decisions by having good data, which is something you provide people, which I know firsthand how that works with you. But having that good information about where's my best spend and using my dollars to really work for you, right? Whether that's in your home, other investments, and or both and.
Right.
But having that information is what's powerful. Then you can make a decision, right? What works for you? What do you want to do? But that's awesome. Like, and right now, like we said, the home buyer market is, you know, getting back in. It's the time. If you've been sitting on the fence, if you've been wondering where's this all going, if you have been scared about what you're hearing on the media and the news, you know, we're just here to calibrate that and educate you and give you some information that may help better balance, you know, what's happening. You know, I mean, I know some people can say, well, sure, you're a real estate agent. You want people to buy in, and you're a lender. You want to lend. I get that, right? That is our wheelhouse. But truly, our hearts are in the space of giving you the best information that you do what's best for you. That's really it, right?
Well, I think the key too is, and you started hitting on it, is the key for all of us is finding opportunity in every situation. So when the housing market really started getting slow in 2022, I knew that investors were buying. Where do you think I started putting all my energy? That was the opportunity.
Right.
Lenders don't like working with investors. I love working with investors.
Right.
So, and there's a lot of reasons lenders don't like working with. I love working with them because my whole mission in life is to help families create sustainable wealth. It's why I run financial strategies, I don't sell loans.
Right.
Loans are just a mechanism for helping families create sustainable wealth, right? So even when the housing market was slow and people stopped buying, investors never stopped.
Right.
I shifted my focus to investors, right?
To where the thing was.
And so I think for all, that's just me.
So now the focus is shifting into the buyers and the first-time buyers, and not even just first-time buyers in general now, right? If you've been thinking and waiting to move up or move down or whatever your life, you know, needs are, right?
That's right.
That's true.
But it's all of us looking at it because the media, what the media wants us to do, it's sales, right? They're trying to sell something, so they sell fear. We all know they sell fear, and we buy into it, right?
Yep.
And so they sell fear, we buy into it, and we're like, oh, the world is crashing. Well, remember 4 months ago, they were saying that we were going into recession? What recession?
Yeah, didn't really happen.
And I, at that point, I was looking at all the financial data going, it's not coming. It's not coming.
Yeah.
And guess what? It hasn't come, it's not coming, right? So, and notice the media's quieted down on it.
Yeah, that's true.
So when the world's running scared, that's where all of us
lean in
and look for the new opportunity.
I saw a great quote by Warren Buffett, and you know he's a guru, right? People listen to him. It said, when people are being greedy, you know, run. When people are, am I saying it right?
I don't know. I didn't see it. I would have to read it.
Yeah, when everybody's being greedy, basically when everybody's jumping in, that's the time to sit back. But when nobody's kind of running and being greedy, that's the time to lean in, is basically what he's saying. And so I think that's what Ron is saying. Like, now everybody's sort of sitting on the sidelines because we're listening to all this stuff, but now's the time to jump in and lean in. But when everyone else starts getting into the fray, right, being greedy, running in, getting the homes, that's going to shift things, and that's probably the time or lesser time to.
Well, and that's where we started our conversation. That's exactly where we started our conversation, because what did I say? The human psyche is interesting.
Yeah, we do.
We always want to run where everyone else is running, but that's the time you shouldn't be. The key is when everyone's going that direction, find how to swim upstream.
Yeah, so that's essentially what that
and my whole
I messed
life,
it up, but that's essentially what it's.
My whole life in business has been about that. It's like, okay, if the crowds are going that way, that is definitely not a direction I want to go.
Be the salmon. Be the salmon.
Go upstream. And it's more fun, let's be honest.
It's true.
Or just jump out of the stream, find a new one, and then you just have all the freedom in the world, right?
That's great. That's awesome. Okay. So awesome. I don't know if we have questions out there. I'm just seeing. Yeah, I mean, just the one question about, you know, how does that really make sense with the rates and all? And so we've addressed that through our conversation today. So, just real quick, recap of what we're talking about here is why buy now. Oddly enough, or interestingly enough, there was a WRAL, which is our local news channel, segment done on exactly this thing that we're talking about. So we're obviously, kind of reading the tea leaves a bit right here, but they're saying it's a buyer's market now here in the Triangle and here in this area for just all the very same things that Ron has highlighted for you. And if you're thinking about getting back in or getting in for the first time, let's just have a conversation. That's all it's about, is having conversations, getting information, and getting equipped to do what's best for you and for your family and your life decisions. So
that's right.
Right?
It is. That's all it's
so
about.
Ron, how do people find you?
Now, you can find me simply by going to yourhomeloanadvantage.com.
Okay.
Yourhomeloanadvantage.com. The other easy way to do it is I've branded myself by my name.
Okay.
So if you just go to Google
Search Ron
and
Klabunde.
just type Ron Klabunde, you'll see
him.
the name here in this podcast.
Yeah.
But just go Google my name.
Yeah.
You're going to find me on every social media channel. You'll find because I do a lot of education as well in regards to everything we talked about today. So if you're looking for a financial real estate lending tip that's less than 59 seconds every day, just look up my reels on Facebook or on Instagram or TikTok, whatever it may be. And through those platforms, you can easily find me and reach out to me. I respond to everyone that reaches out to me, literally. Last night for an hour, I sat on my sofa just responding to messages that people were sending and questions that they had because of what I post. So,
Perfect.
Diane, this has been amazing.
It's been great,
I love
Ron.
our conversations and working with you.
Yeah, it's been great, and I appreciate your time, and I appreciate the information you always are willing to share, and I appreciate all of you.